Okay, guys, so we're going to start with 1-9 and exercise 1-9. And again, even though we're going over it in class, I still would like you to submit it for homework because it gives you extra credit. Here is an incomplete financial statement for Reedy.
I have a question. Something about extra credit?
Did I say extra? I didn't mean extra credit. I'm sorry. I meant that 20% credit for homework.
Oh.
I apologize.
Got it.
If we're really desperate and you need extra credit, we'll talk at the end of the semester, but I really don't think you're going to need it.
And we're submitting this.
You're submitting the homework
Okay.
to the, you're going to submit the homework to Moodle. So if you go into chapter 1, do you see where it says chapter 1 homework problems?
Yeah.
You'll be able to go and submit exercise 1, 1, 3, 9, 11, 14, and problem 3A to the Dropbox. Okay?
That's due next Monday?
Next Monday, whenever the quiz is due, the homework's going to be due at the same time.
Okay.
Okay? Okay, so getting back here, here's an incomplete financial statement for Righty. It gives us our assets, it gives us our liabilities and our stockholders' equity, and then it gives us the income statement and the retained earnings. Our job is to determine what amounts are missing, okay? So, as you can see here, we've got our revenues. We're missing, okay, let's go back and look at what we're missing here. We're missing, A is common stock, whoops. We're missing our common stock, we're missing retained earnings, B, and then we're missing cost of goods sold, we're missing net income, and we're missing E, how it says here to add net income, okay? So when you look at all these, it almost feels overwhelming. Where do I begin? But we know that you normally start the financial statements. What's the first financial statement we're going to start with? The income statement, okay? Because with the income statement, we have our revenues and our expenses to come up with our net income. Then whatever that net income we have, it flows over to the retained earnings section, doesn't it? So once it's in the retained earnings section, because we're adding our net income to our retained earnings, and then this retained earnings section here of $27,000 is going to show up over here, won't it? In the liabilities and stockholders' equity section. So if we look here, and the first thing we'll do is the way we can figure out what our net income should be is by filling it in the retained earnings section. So you see the beginning retained earnings was $12,000. The ending retained earnings is $27,000. It shows that we paid out dividends. So what do you think our net income needs to be? All we have to do here is truly just fill it in, backfill it in. What do you guys think it's going to be? 20,000? 20, so that's 32. Yep, 20,000. Perfect. So we know that our net income has to be 20,000. Okay, to make this retained earnings statement complete. So let me pull this PDF up for chapter 1. Excuse me here. Solutions and exercises. So, whoops. So we know the retained earnings statement is the retained earnings statement ending balance, sorry guys, is $27,000. To make that work, our net income we know needs to be 20,000, okay? Does that make sense? So our net income is going to be 20,000 here. Beginning retained earnings plus net income minus our dividends equals our ending retained earnings. So we know our income there has to be 20. Okay? So if we go back here and if our income has to be 20,000, which would be our net income here of 20, do you see how we can plug in what our cost of goods sold need to be? So our 85, if we're going to end up with 20,000 of net income, then that means we've got to have 60,000 in total costs, expenses. And if our salaries and wages are 10, wouldn't our cost of goods sold need to be 55? Make sense? Nick, am I totally losing you?
No, you're good.
Okay. So we're filling in C by the fact that we know our net income here. 85 is our revenue, minus our cost of goods sold, minus our salaries is going to equal 20. So basically 55,000 is going to be the cost of goods sold. Okay? Then, if we go back to the other page here, we know our retained earnings is going to be, did we say 27,000? If our retained earnings is 27,000, how are we going to figure out our common stock? Again, won't we just plug it in? So our assets all equal 62,000. What's that accounting equation again? Assets equal liabilities plus stockholders' equity. So we know the 62,000 of total assets are going to equal 62,000 of total liabilities and stockholders' equity here. So if retained earnings is 27,000, what does our common stock need to be? 33 or 34,000? 30. So thank you. So 5 plus whatever the common stock is plus our 27 equals our 62. So our common stock has to be 30. The purpose of this is to try to help you understand the relationship between the various accounts. I'm not giving you a problem like this because I don't want to trick you. You know, it can be confusing the first week. But understand assets always equal liabilities plus equity, and that the net income's the first one we're going to do. Because once we figure out our net income, that flows into our retained earnings, or stock, you know what I'm saying, the stockholders' equity section, retained earnings, which ultimately then we can fill into the balance sheet. Do you see that order? How that order works? Okay, guys, next. What was the other one? 9/11 was it, or 11? Okay. 9/11. Kellogg Company is a world's leading producer of ready-to-eat cereal and a leading producer of grain-based convenient foods such as frozen waffles and cereal bars. Suppose the following items were taken from its 2014 income statement and balance sheet. What we need to do is identify if the item is an asset, a liability, stockholders' equity, revenue, or expense. Now this is exactly kind of what you're going to have on your quiz. You know, that's matching. I'm going to have accounts for you, and you're going to have to say what kind that they are. Okay? So, who wants to take retained earnings? What would retained earnings be, guys? Stockholders' equity. Who agrees with that? You guys agree? Good. What's the next one? Cost of goods sold. Expense. What about selling and administrative expense? Cash. Asset. Cash. An asset is what? Something you own that will give you a future benefit. Okay? What is notes payable? Liability. What's interest expense? Bonds payable. Inventory. sales revenue, accounts payable, common stock, income tax expense. Perfect. So guys, again, nothing's tricking you here. The only thing that could trick you on a problem, which I know you're going to have, if you hear something called unearned revenue, you're going to think it's a revenue, but is it? It's not a revenue yet because it's unearned. So that is a liability until you actually earn the money. Okay? Nick, that's one thing we talked about. If you can listen to that lecture, that'll help you. Okay? That's because I'm not trying to fool you or catch you on something, but unearned revenue, even though it's got that term revenue, it's not a revenue till you earn it. Okay? Now what we have to do is we need to then prepare an income statement with all this information. So what do you guys think? I'm going to have you help me do the income statement. I'll do it on the board. Actually, I'm not going to do it on the board. I'm going to do it on here so you can go over it again.
I have a quick question.
You bet.
So what did you say unearned revenue was?
Unearned revenue is when
Well, I mean, what did you classify it as?
a liability.
Okay.
And what unearned revenue is, just for Nick's purpose, is let's say I am going to do an audit for a client. And it's like a divorce. I never see anyone happy after an audit. Even if they end up owing nothing, they're still mad because they have to pay me. Do you see what I'm saying?
Yeah.
So we generally ask for a retainer up front. Say we ask for a $1,500 retainer. They give me the cash, but I didn't really earn the money yet because I haven't even begun the audit. So even though I get the cash, it's really not earned revenue, and I don't show it as income until I've actually done the work.
Okay.
So since someone has given me money, it's really, I might have to pay it back if I don't do the audit. So it's a liability until I earn it. Okay? So let's talk about this income statement. What's the first thing we have to do when we're dealing with an income statement? We're always going to show the name of the company. Okay? So we're going to show Kellogg. Here, let me make it big for you. Kellogg. Kellogg Company. And this is income statement for the year ended December 31st, 2014. Okay. What is the first thing we do on an income statement? Revenues. So we've got sales revenues of how much? Oh, sorry, you're going to tell me what to do. Well, it's sales revenues, the first thing. How much is that amount? $12,575. Then what's next? What's the first expense we're going to look at? Cost of goods sold is how much?
$7,184.
Perfect. Next one. And how much is that? Next one. Income tax expense. $498. Next. For $295. And we've got total expenses here of $11,367. So we're going to have net income. Why? Because our revenues are greater than our what? Expenses. So it's going to be net income. Now, if this showed $10,200, then we're going to have a net loss, right? Just because our expenses there would be greater than our revenue. Make sense, guys? So this is an income statement, okay? You're going to have something like this, and this is going to be your problem, but we're also going to have a balance sheet too, so we're going to look at a balance sheet. But this problem, I think, just called for an income statement, didn't it? Okay, and then what's our next one? 14. Okay. Edward's a bookkeeper for Edmondson Company. He's been trying to get the balance sheet to balance. It finally balances, but now he's not sure if it's correct. So we've got to look at this and figure out what's wrong. So this balance sheet for assets, assets are items we own that have a future benefit. Is there any asset there that's not right? Where do dividends normally go? They go in stockholders' equity, don't they? So dividends aren't something we own. They're something that the company pays out to the stockholders, right? So if we took this dividend out of here, so we would show our cash, supplies, and equipment. So let me just go to another sheet. So if we took Edmonton, what is it? Here, let me, Edmonton, what is it? Edmondson, okay. So if we took Edmondson Company, and we're going to have balance sheet as of December 31st, 2014. What didn't you like? Merge across. Oh, what am I doing wrong? Merging, well, you know what I'm, this one needs to, sorry. Oh, I know why it's doing that. It's doing the date format. As of December 31st, 2014. Okay. Okay, so when we start with assets, we always start with our current assets or cash. Our cash is $18,000. Our accounts receivable is $12,000. Our supplies are how much? $9,500. And what's our last one here? Equipment would be what? 40. So we have total assets here of $79,500. Then if we go and we show our liabilities and stockholders equity section, we're going to start with our liabilities, accounts payable of how much?
16,000.
We're going to start with accounts payable of 16,000, and then our stockholders equity section, we've got our common stock of how much? 40,000, and then our retained earnings. What did we have our retained earnings to be? What did it show here our retained earnings were? It showed retained earnings of 31.5, doesn't it? Okay? But really, the retained earnings, shouldn't it be the 31.5 minus our dividends of 8,000, right? Or am I doing something wrong? Common stock of 40, retained earnings of, what did we show at 30? $31,500 was going to be our retained earnings, right? But we have to subtract our dividends of $8,000 from our retained earnings to come up with a new number of 23.5. So if we show our retained earnings to be 23.5, total liabilities and stockholders' equity. You see what I'm doing here? So basically, what was goofy in this situation is they provided us with different accounts, but he put dividends as an asset. And he should have taken those dividends and subtracted them from retained earnings, okay? Because if you know it always has to balance, you know there's a reason behind the madness, okay? So in that example in the book, he shows the assets higher than they really need to be, don't they? The assets really should be 79. The total assets aren't 79.5. What am I doing wrong? Cash of 18, accounts receivable. Oh, that's the other thing he did wrong, guys. Look how he put the accounts receivable over here in the liability section, where a receivable is always an asset, isn't it? So he didn't add that receivable over here, and that dividend should have been over on the other side. So our true total assets are 79.5 by our cash, our receivable, our supplies, and our equipment. And we don't have the receivables over there in that liability section, but we do want to subtract our dividends from our retained earnings. Any questions on this? Is it making sense? You guys okay? You want to go over the next problem? Okay, and that is 3A. Problem 3A. Okay. If I'm going too fast, it's your job to tell me to slow down. Okay, so here, Hightower started with an initial investment in the company of $22,100 in cash. Here are the assets, liabilities, and common stock of the company at June 30th, and the revenues and expenses for the month of June in its first month of operations. And it's telling us in June the company didn't issue any additional stock, but it did pay dividends of $1,400. We need to prepare an income statement and a retained earnings statement for the month of June, along with the balance sheet. So let's look at our income statement, and we know we're going to prepare the income statement first, then the retained earnings statement second, then our balance sheet, okay? So when we talk about our income statement, what do we put in our income statement? Revenues and expenses, don't we? Right? So, the name of this company is Hightower Service. Income statement for the period ended June 30th. Okay, any revenues? What do you guys see there? service revenues here of $7,500. So we'll show that as our income. And then what kind of expenses? Let's make sure we pick up all the expenses. What kind of expenses do we have, guys?
Salaries and wages expense.
Salaries and wages expense of how much?
1,400.
Perfect. Next.
Supplies expense,
Supplies expense of how much?
1,000.
Next.
Maintenance and repair expense.
Of.
600.
Next.
Utilities expense.
Mm-hmm.
300.
There's one more.
Advertising expense.
Of 400. Right? So all of our expenses total 3,700. So therefore we end up with a net income of 3,800, don't we? Does that make sense? Let me know when I can move on, because I don't want to rush you. Okay. Now, the next thing we want to do is a stockholders' equity section. Okay? So in our stockholders' equity section, we're going, or retained earnings, I guess, section. I'm going to go down here. Well, anyway, I'm putting it all on one line here. Okay, so what are we going to start? When we go back and look at this book, look here. It started with an initial investment in the company of $22,100 cash. Here are the assets, liabilities, and common stock of the company at June 30th, and the revenues and expenses for the month. So, what are we going to draw out of here for our retained earnings section?
Net income and the dividends.
The net income and the dividends. Exactly. So, we're going to start by showing the retained earnings as of June 1st was how much? 0. Right? We just started. Then we're going to add to it net income. And where are we going to get that income from? Up here. Right? Then we're going to have less our dividends. Didn't it tell us 1,400? Then we've got a retained earnings as of June 30th is going to be our 3,800 plus whatever we started the retained earnings with minus our sorry, I did something wrong here. Minus E27. Not E27, E26. Some C23, C24 minus E26. Shouldn't that work? plus C26. Oh, yeah, that helps to have the right. So 2,400 is our retained earnings, right? Okay? Does that make sense so far? Now we've got to go and create a balance sheet. So our balance sheet, we're going to okay. So this is going to be a balance sheet. As of June 30th, 2014. It's not for the period ending, because remember, it's a point in time. Remember how we learned that? Okay, so what are our assets going to be? Let's go back here and look. They'd give us our cash, don't they? We're going to list all our assets. Let's look at this and see where all of our assets are. So the first thing we're going to take is cash. And the cash balance is how much? $4,600. Then what's next? We also have an accounts receivable of what? 4,000. Supplies? 2,400. Equipment? So we've got total assets here of 37,000. Now what about our stockholders' equity section? Or excuse me, our liabilities. We have accounts payable of how much? 500. We also have something called notes payable of how much? 20,000? 12. And then in our stockholders' equity section, how much is our common stock? 22,100. And what was our retained earnings from our retained earnings statement? 2,400. So our retained earnings includes our common stock plus our retained earnings. So do you see how our total liabilities and stockholders' equity are 37,000 and it matches our assets of 37,000? Make sense? Any questions? Is it kind of sinking, gelling together, guys? Awesome. Any questions on any more problems you want to go over before we move on? So just so you know, if I go here to Moodle, on Monday, your responsibility will be to submit the homework problems. I don't care how you submit them. You can put them on Excel, you can put them in a PDF, you can scan them and put them in, I don't care. Just you submit it to the Dropbox. Do you guys call it a Dropbox here also? Okay. You submit it to the Dropbox before you come into class. Okay? Yes?
I found the 1, 3, 9, 11, and 14s, but then where was the 3A?
Where is it?
Yeah, is it just with the other exercises?
Okay.
Because that was usually buddy's book.
Oh yeah, it's after the exercises, then it's problems. So look here, if you look at the book, this, you see how the exercises, here's exercise 114, and then it moves right into problems,
Okay.
okay?
Yep.
So you guys, just so I make it clear, you're going to submit the homework, and then to take the quiz, you can click on this quiz button, and you've got 4 hours. And it's 7 multiple choice, just like what we talked about in class. What is an asset? What's the accounting equation? When would you have net income? Is it when revenues exceed expenses or when expenses exceed revenues? There's no secrets on this, okay? It's very straightforward. And then you'll have a problem just like what we did right now, that problem 1-3, okay? My purpose, again, isn't to trick you or make something harder. It's really to help reinforce what we're doing in class. That's all it's about. And we're going really fast, and so that's why I'd rather us, it's just a refresher, you're getting it. So you have 4 hours to take that quiz. Now, I've not experienced many people having problems with Moodle. I can set it for you guys that you have 2 attempts. I mean, really, I don't want you to take 2 attempts, but I'm going to go ahead and set it that way in case you get kicked out. Do you get what I'm saying? You've got the ability. You don't have to wait for me to get you back in. Am I making sense what I'm talking about? So the quiz is on there. Really, the main thing is chapter 1 is due Monday night before 6. Are we good there? Now, I can give you longer, but I just find sometimes you like to just be done with that and move on. And if I give you till next Wednesday, then you'll take till next Wednesday, and then you'll be mad at yourself because you're getting them all mixed up. Okay? Okay, I'm going to stop this